2 weeks ago, I did a video about a bonus trade on the Australian dollar. Now, you might be wondering, how did I come about in making that decisions? Well, um, it's quite simple. I use these tools over here. The first one is Market Bulls, Bar Chart, Forex Factory, CFTC.com, and then I use investing.com. But in order for you to learn and to know how I use them, I think let me show you how they truly work. I can guarantee you that this will make your trading, no matter what strategy you're using, this will make your trading way, 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 I mean, way, way, way better than you normally trade. So, like I said, I start my analysis on market bulls. So, basically, what I do on the channel, I show you that you don't have to press the sell or the buy button just start your trading analysis on being technical. So what I do with market bulls, normally, as you can see, there's an array of sections which you can go to, but I use it mostly for seasonal tendency. And part of it, I start my analysis by doing the seasonal data. So before I press any buy or sell button, I start my analysis here. So if you can start your analysis here by looking first at the seasonal tendency, it will go pretty much well for your trading. So I'm having a hard time with this right now. Okay, so what I did was that I normally switch off the 2 and the 5 years and let the 10 run. So as the analysis was 2 weeks ago, it was the first of the week. So on the first of the week, normally what happens to the Australian dollar for the past 10 years is that it normally goes up, feeling some kind of liquidity or imbalance or whatever you want to call it. But on the first week to the second week, which is about the time when I told you when to do it, you normally it normally happens that way. So most what I do, and then I looked at the charts, and then they showed me that the market was in a discount, and they showed me that this is on a seasonal tendency. So for the past 10 years, this Australian dollar pair, it usually goes up the first week and then gives up the ghost during the next part of the month, which is pretty much looking like it's gonna do, by the way. So keep an eye out for that later. So after I've analyzed like this, I see that on the first week it normally goes up. I then say, okay, I'm in bullish for the first week of August. So it gives you a month to month kind of a vibe, and then it gives you a whole year if you look at it, how it has been moving for the past 10 years. I couldn't show you with the 20 years, but it's pretty much normally it does the same thing. It does the same thing here on this chart. It does the same thing. So once I'm done with my seasonal tendency, I look at the dollar now. I'm looking at the dollar, as you can see. Now, what happens to the dollar run about the first week? It kind of like goes down first, and then it goes up. But normally we're not counting the seasonal tendency for the US dollar, but let us do it for the sake of being complete. As you can see, it starts down and then goes up, and then in the later parts it goes up, and then but it's a free tool, this market bulls. You can use it for your own analysis. So for the past as you can see, 20 years, 15 years, and 10 years, in the first week it normally slides down, goes down. So I know that I'm pretty much confident that at least on the first part of the week it goes down, you see. So I knew that the dollar was going to be weaker. It has been weaker for the past 10, it has been weaker for the past 10, 15, 20 years. So I was pretty much confident with that It's gonna slide down to the bit at least for the first part of the week. Now that I'm done with that, I just switch off. Maybe I could add a tab, but I don't want to for the sake of this video. So what else do I do now? I go here. It's called the CFTC dot gov. You can bookmark these, or you can feel free to look at the first video of the channel, whereby I go into in-depth detail about what does the CFTC does, what do I look at market pools for. So as you can see, I use the CFTC for this section, the market and economic analysis. Now, what I use it for, I go to the commitment of traders. These are the positions, of big institutes. Every Tuesday they want these positions. So what you do, you go here to the Chicago Mercantile Exchange. You don't look at the long format, you look at the short format. Uh, and then you look at your assets. These are the positions and everything. But wait until I find the Australian dollar, and then you'll see what I mean. Let's go. Let's go. Okay. Okay. So by the way, these are all the positions and the assets which you would like. They are all here, but gold is in the agricultural ones, because I think it's a commodity. So I think since it's a commodity, yeah, they just do it like that. But you can go and Google about this stuff. I'm not gonna teach you here. I'm just gonna show you how I normally use this there's everything. This tool over here, there's everything. There's SMP, everything that you thought that the banks or commercials won't tell you. It's all here. The US wants them. They want those positions. They want them to report them on a Tuesday and give them out on a Friday. So what is this Australian dollar? Speak of the devil. As you can see, this is the Australian dollar, Chicago Mercantile. This has been updated, as you know, because it's a weekly thing. They want to update it each and every week of the year. So what I did, the positions, the long positions here, I go to commercials. I don't care about the non-commercials. I know how to use the non-commercials, but most of the times, and all of the times, please, all of the times, unless you want to delve in more, you can delve in and see how they use non-commercials, but I use commercials, and I can understand how to use non-commercials. But for the sake of this video, I use commercials, because the commercials are the one using the currencies, the farmers, the everything. You get them, their positions, it's on the commercials. So here's a little nugget for you if you want to. So as you can see, these are contracts of 100 Audi, 100,000 positions. So by the way, just think that if you're trading your prop firm, or your whatever account, these positions which they have here, they are over your 100K account. And let's not talk about prop firm, because you're only using 10% of simulated trading, which by the way I have a problem with. But it's a story for another day. Using you know the story of using challenges and simulated trading. Why the hell do you want me to make 13% for you, 8 and 5%, and then I do not partake in those winnings? For me, it's just a bunch of nonsense. But hey, I hear people are putting in new prop firms. So back to the video. Don't let me talk too much. So back to the video. You use the commercials. As you can see, long means buy, short means sell. So there were many, as you can see, they had 94,000 and they had 45, almost double. the position of the selling positions. Now, what does this by itself doesn't tell us anything. But if, as we are going on, as we started on the seasonals, it tells us that they were going long for the past 2 weeks. But if you look at it, I think on the last 2 weeks it was on sitting on 90k, not 94k, meaning that they have added for the last 2 weeks maybe 2,000 or so more positions. So yeah, it was around about 90k. So it's still the same. It's still at 94. So it's still the same. So what you do now, you have a seasonality, which is saying every in the past 10 years, the Australian dollar in the first week has been going up. You have the commercials, the ones which use these assets the most, saying to you that we have 90,000 or 90k possessions over the 45k positions. So obviously there's a lot more longs than shorts, meaning that it's pretty much more than what me and you can afford. So there's no way that someone like these guys over here, these 94k positions, are looking at your stop loss or whatever. That's just bad trading psychology on your part. No one is looking at you. No one wants you to fail. No one wants anything to do with your trading account. So that's why I did this video right here, so that I can get every psychology, every risk management, every strategy off. Because once you use these methods, I can guarantee you that any strategy, whether you use trends or you use whatever triangles, you use head and shoulders patterns, if your trading is lacking, it's lacking because you are not doing these types of things. And as you have seen in the intro of this video, I didn't start by looking at charts. So after I'm done with these long long positions over here, this requires a whole lot bit of work, but it will really benefit you in the coming years. So every month I tend to do it every month because I've got more experience on it. But most of the times I look at the at the at it once a week, maybe on a Friday or maybe on a weekend. Yeah, most of the times I like to do my analysis on the weekend. So you too, that's a heads up for you and a hint. As you can see, we have everything here: natural gas, metals, and others. Just know that you're using the short formats. You will find everything here. You'll find your golds, your palladiums, whatever that you want. You'll have everything. You'll see every position which they have. In agriculture, you'll find your cocos, you'll find your soybeans, you'll find everything. So this is really what makes you fail with trading, because you don't know how to do this. But now I took it upon myself to show you that once you do this, your trading will exceedingly improve. If you use this, then I can guarantee you will be profitable in a matter that you don't know yourself. You won't even think that it's you that is being this profitable. Right. Moving on to the third part. We've seen the seasonals, we've seen their positions, we've seen that it's bullish over here, it normally goes up. We've seen that there are more buys than shorts over here, meaning adding to this over here, and it's been happening for what? For the past 10 years. If you look at the 20 years on the Australian dollar, which we didn't get to do, you will notice that it has been doing it on the 20 years. Just do your own bit of work and research so that you get over this. Resource number 3. This is one of the coolest ones. There's a nugget here which I want to drop for you because you like these nuggets and I like to teach them. So for anyone that's listening to this teaching, you see this is written 5.5. It's 5.15 because it's basis points, right? Ever heard of those things? 0.25 basis point or 100 basis points. This is the five. This is the 50 basis points or 5.5. I'd like to just remove the zero and call it the 5.5. You know, it's 5.5. That's just that simple. It's 5.5. As you can see, the Federal Reserve, we're looking at the US, it's 5.5. And then also we wanted to go up against with the Bank of Australia, which is 4.35. Now, here's the nugget here. The interest rates. The interest rates like to chase yield. So as I'm looking at the Australian US dollar and seeing it over here and seeing it over here, I'm noticing that it's 4.35, and then it's chasing run about the video. I'm sorry, there was a freeze. There was a freeze over here. So I'm so sorry for that. But for the case of completeness sake, I won't edit anything out. So as you can see that this thing called here 550, and this one, that's the Reserve Bank of Australia, is 4.35. The interest rates likes to chase yield, meaning the small one would like to chase the big one. Look at every chart. You will see that the smaller one likes to chase the big one. You see, so I'm not saying go out there and start looking at the Swiss franc and say, will it chase the CHF euro, the Euro CHF? Will it chase the European Central Bank? Do your own research and see if I'm lying, and see if the CHF isn't chasing the euro on your chart. You will find out that this is one of the best parts of the videos. This is one of the best parts of the videos. Now, once I'm done checking this, as you can see, it's just a simple thing. I'm just checking the interest rates, which one is bigger, and then I know that the smaller one will chase the big one. So imagine this: we have a seasonal tendency which is bullish. We have positions which are more than the possessions which are more buys than sells, and then we have an interest rate which is chased. Meaning what? Meaning it will go up. So we have interest rates on our side. We have a 10-year tendency on our side, and we have 90k positions over 45k positions. I mean, it doesn't take a genius to see that this trading thing, we had it. Now, this is the coolest one. The coolest part about this video. This is the coolest one. I can guarantee you, this is one of the longest videos which I do. I don't normally do videos like this, but I want to show you the model of this channel, why I really want you to go into this trading thing and succeed. So you come here at barchart.com. As you can see, barchart.com. All these tools, by the way, are free. Nothing here is needs you to do a premium. Everything here is free. So what you go and look at it, you just select a commodity, you go to grains, your soybeans, your everything. You see how the correlation happens. Your metals, your gold, your everything from CFTC. You see how it's going on. It's going with telling you that these are the guys that you're looking at. This is what you must trade. So as we're looking on currencies, what's the Australian dollar? There's the Australian dollar. So you tap that. Now, Barchart uses futures, but I've seen that on their beta version, they are using something very, very cool. They are actually using charts. Now, before, it wasn't like this on a chart, but normally now it's like this. So it will pull up this symbol here. It's showing you that this is a futures account. Now futures account, not a futures account, this futures chart. Now futures charts mean one thing. Futures only use one chart. If you're trading futures, everybody knows that you use one chart. No one, it's not like forex where everyone uses their own kind of thing. You only use one chart, so I like that because it's much more centralized. And even if you come into your forex charts, this is not this is not gonna this is not gonna hinder you. So you just change that candlestick, open, close, and then it should do this. Your normal Australian dollar. So go do a little bit of research about open interest. See this purple line. Wonder if when it started in June. As you come, the interest goes higher, 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 higher. I'll let you do a little homework about open interest. I know how to use it, but this video is not for me. It's for you. So what you do with this now, I present to you the best part of this video. So you go here to study. Go to study. After you go to study, you go to the commitment of traders chart. The disaggregated one is normally your goals, your everything. But since we're doing currencies, you are looking at this, the commitment of traders chart. So let's plot it right there. Then remember, we're looking for the commercial speculators. We're not looking for the large. So we'll just remove the large. We'll remove the small speculators, which are traders who don't know what they do. The large institutions are the one which the trend is your friend. So I know how everything works, but I'm just showing you just this model that we use here, that and the model that we're gonna be going on forward with. So just know that every decision which I make on this channel and every other trade which I'm gonna look at, or I'm gonna take, or I'm gonna show, this process has been done on any assets which I look at. So we just say add. I like this because I'm slow. I won't have to do it again. So here is it. Here is the coolest part of the video. The coolest part of the video. Now, normally what they will tell you, I think there's a freeze again, there's a small freeze again. But normally what they will tell you that if it's below the zero line, then it's bearish. But if it's up, it's bullish. Now, in order for you to catch the big bankers high, this is actually their hedging positions. So what I normally look at, I look at the 6 months and the 1 year. I'm slow because I don't want to repeat this again. I'm slow and I'm teaching this and I'm taking my time with this, and I don't care about views because I want to do this and show you actually that 2 weeks ago I called this to happen. I even called this manipulation, that at first it's gonna sell, and then on a Tuesday, this is a Tuesday. On a Tuesday, you wait for the interest rate decision, and it went crazy. So I'm not even gonna do it. Even right now, as on today, I don't think this video is gonna last. I don't think this video is gonna last until what's this, unemployment claims, which by the way, I'm thinking it's gonna sell because I've seen that it's on a pretty much on a very discounted rate on the dollar. So I'm thinking that a dollar would want to make a profile of a Thursday reversal. But it's just me, just learning, just giving you some insight and showing you how this thing will actually pan out. which I think that is how I think it's going to pan out, because once it's here, it's already in deep discount. Even from yesterday, I was thinking that this thing is going to sell now, because this is deep discount. If you look at the range from here to here, this is discount. You're probably maybe 70% or 80% or whatever, or 79% of this range over here. So yeah, I think it should sell off a bit, retrace maybe here, find support, or here, find support, whatever it is, whatever it is, because now you're looking at this this swing point. If it remains like this becomes a swing point, then you can try and take it over here, and then add another, and then if you didn't get your opportunity here, you can, if you didn't get it here, you're probably gonna likely get it there. So yeah, that's that's the Australian dollar trade, and how I think the market will unfold today. So let's get back to COT. Oh, I've already taught you about if it's at the zero, but you must minus that. Here's what we do. I want this to go. Yep. So this is the 6 month range, by the way. So what you do is simple. You add a drawing tool. You just click on it, and then you left what right click on it, and then you'll get this. Everybody knows how to use these tools. So and I think I'm teaching to people who like to trade. So what you do here is to plot the first chart over here, plot the first line, you make it bold, then you use bright colors. um let's use green. Let's use green, and then we apply it. Then we apply it. This is turning to be a much longer video than I anticipated, but since I'm doing it once, I do not think it will bore you that much. This is actually, I'm so confident in this and this analysis, that this will transform your trading so much, that I'm so confident in it that it will do it. This, if this doesn't do the trick for you, then I don't know what will. But I know why you're failing. You're failing because you're not doing this. So you look at the highest point of the last 6 months, which is already this, which is already here. And then you look at the lowest point. What you want here is the 50%. You want the 50% of this range. If it's above 50, just know one thing, yeah, they are bullish. You see the big banks, the commercials, the ones that they've been telling you that you can't trade like them, they're actually lying to you. You can. You can trade like them. You can. You can trade like them. But what you have to understand is that this is their model. If you can look at it, for completeness sake, let's at the 50% line too. This video is taking way long. I didn't anticipate. I thought it was it was gonna be the most one of them. I knew it was gonna be the long, but this long I didn't think so. But it's for your own sake and for your own good. So as you can see, this red line over here, it's above 50% of this. You see, you see this thing over here. And if you can look at this, look at this. You see this here. If it's up, if it's more upper than 50%, if it's above 50%, then no, they are bullish. Look at this. Look at this. You see up until here. You see up. Let me put up a horizontal line for you. I want you to show. I don't want you to fail anymore with your trading. So that's why I'm doing this video over here. I don't want you to fail anymore. This is what your mentors are always hiding from you. They are always hiding this stuff. They are always hiding this stuff from you. Your mentors are hiding this. What's happening now? You will bear with me. If you look at this, I'm sorry. I'm sorry, but I'm not using the best tools. So just bear with me. Just bear with me. Just um, just bear with me, please. The video is gonna end, but it will be one of the most life-changing videos for you to understand the trading game a little bit better. So as you can see this side here, look at this. Look at this flurry, and then look at this. They've been above 50%, and then they went below 50%. Look at what happened from here. From here, they went below 50%. This right here, we call it accumulation manipulation. So they were actually hedging. They were actually hedging. They were actually buying and selling, buying and selling, buying and selling to take out this liquidity here. So they took this liquidity and then they sensed that no one is with them. And then look at what happened here on this flurry. You can draw your own charts. But look at what happened when they got here. This, as I told you, this chart, this candle here, even on the analysis, the 5 minutes analysis, which has normally happens here on this channel, I talked about the interest rate, and guess what? It chased yield, chased the USD dollar. So this is the best part. So every time you look at this and you do this, this is the best thing you need for your trading. If it's above 50%, know that they are going up. Now I can do the 1 year, but I will be elongating this video. So do the 1 year for yourself, because I told you that I use the 6 months and the 1 year. And roughly, we're not done yet. Just have to close out with this, with this, with this last one over here. Who doesn't know this? Forex Factory. But most of what they do not tell you, including your mentors, they don't tell you one thing: how to use, how to actually use this data. When you're using an economic calendar, you're framing the profile of the week. You're framing what's gonna run, what's not gonna run. I will do an in-depth a video if you want to, but I'm gonna do it anyway because I don't want to press on people like I'm like the gatekeeper of everything of knowledge. But because you're gonna start me very, very, very stupid questions like how come you're not a billionaire if you know this? How come you not? Yeah, you're here to learn. Don't ask me nonsense. I'm just telling you that the economic calendar, we are using it for the profile. What's going to be happening on a Monday? What's going to be happening on a Tuesday? What's going to be happening on a Wednesday, on a Thursday, Friday? How, what are the world events happening? What other things are happening economically on the pairs that you are trading and what impacts them? So, yeah, that's what you use the economic calendars for. Now, let's just a little recap. When we started the video, we showed you the seasonal. Seasonally, it goes up for the past 10 years. For the last 10 years, it has been going up. We've shown you on the CFTC, their positions. Any asset that you think of trading or you're gonna trade, it's at CFTC. They report those things. So anyone who's telling you that you can't do it like the big guys is actually lying to you. You've seen how the interest rate happen. You've seen the hedging program on bar chart, how they cannot escape from you any longer. Just do the 50% thing, and then you know you're in. If it's above the 50%, then it's bullish. If it's below, then it's bearish. You try and look at the market from that sense of things. So hopefully you find this video impactful for your own trading, and it's gonna help you to be a better trader. In fact, it's not gonna help you. I know it's gonna help you with being a better trader. I don't care that you wanna press this and go to the Australian dollar. You see how confident I am now. I'm going to the Australian dollar. I'm going to the Australian dollar, and I'm gonna go to the daily. Which, by the way, there's another tool here, but which I use for my trading, but it's something which I'm gonna show you another time. Yeah. So why do I say any strategy happens? The ICT boys, the liquidity boys, the turtle soup boys. This is their turtle soup on a Monday after NFP. The ones who wants to trade support and resistance, this is their zone. It has worked here, and if you look at to your left, it has worked there, it has worked there. Many schools of trading. The fair value gap, boys, here it is. There's a support. Here's a small little gap. Here's a gap over here. So everything happens. Here's a breaker for those who wanted to take it down and get it at a cheaper price. Here's the trend guys. The trend guys are here. It must touch 1, 2, 3, and then it goes up, or it must touch all of that nonsense. It's all here without first touching anything. So I hope you find this video as insightful as I think it is. So whatever strategy, I mean that whatever strategy that you have, how whatever complicated, this video, this video over here, this video here will help improve your trading dramatically. And hopefully, if you like this, I wish you the best. And if you want to or like to, you can like and subscribe, because the analysis comes every week, and hopefully we can engage on other things for the channel. Peace.